Okay, this is Timing Strategies client blog update for Friday, October the 10th. It's being posted on Friday, October the 11th. What a week. I'm not going to go into all the carnage and repeat a bunch of useless statistics that everybody else is already blathering about all over the planet. Let's just get down to brass tacks here. Doing a little repeat. I haven't posted for a while because I've been out of town for about almost 10 days. But we got long, we took some profit up here back when Hank, our esteemed Secretary of Treasury, pulled a stunt. We took the profit about on half of it. We reloaded up here. We got long by about 60%. We took a small piece of that off, ratcheted it down to about 50%. Didn't really do that much difference of the amount that we took off. On Monday this week, we went from 60% to about 90% long. And then on Thursday this week, we went from about 90% long to about 120% long. Our previous estimate of getting long at about 1020, right at this level, 80 to 90% or 90 to 120%, got scratched. We did not do that. Now, when I say we are long 120%, that includes the energy sector that we got long. We got long 7.5 back here, held it, it moved, and then it got washed out. We went from 7.5% long RIDEX Energy Service basket funds to long 10% here on the 16th of September. That worked out well too. And at the same time, using the GDX as a proxy for the RIDEX precious metals, we got long also 10% there. So we have a 20% exposure to RIDEX Energy Services and precious metals. And then also we had a short exposure, 10%, to the RIDEX Inverse Government Bond Fund. That worked out, and it came right back to break even, and then it went back down and started to work out again. So effectively for about a month now, we've been short the RIDEX Inverse. We've had the RIDEX Inverse Government Bond Fund 10%. We took that entire position off on Thursday the 9th, and we switched that Inverse Government Bond Fund into the basket that we used on the S&P, the NASDAQ, the Russell, and the Dow on this day. So effectively we took about the profit, which was 10%, turned to about 11.5%, 12% total portfolio, and we switched that over into the basket using the long indices, S&P, Dow, NASDAQ, and Russell 2X, RIDEX 2 beta funds. We still have approximately 45% money market in the account, with a 120% exposure almost pretty much to the overall indices of the gold and precious metals market. What are we looking for? What am I looking for? A retrace back up into this level, somewhere just below the breakdown level at first. It's about 15%, up to about 1080, 1020, about 1020 is about what I'm looking for. A bounce back up to about that 1020 point. Or with a whole lot of manipulation, government fraud, money printing, just absolute hysteria to the upside and everything's great, we should get about a 20%, 25% bounce back up to that breakout level. I believe that we are now in the midst of a actual depression, not recession, but a depression-type market. And looking back at what's going on and why, is that on the 19th, Hank Paulson came out and said that, number one, you cannot short, and this is what happened. This is where we got long on that day, on the 17th. The 18th, we made a new panic low with massive advanced decline extremes. We got long there, and then on Friday, Paulson comes out with a $750 billion blank check. Here, sign this. We need this money now. Don't ask why. Just give it to me. Scheme. And you can't short 900 financial stocks also. That, to me, was absolute dirty rug pulling type of behavior, and it was designed for a lot of things. I'm not going to go into them on the public here website. If you want to know what I think that was designed to do now and after sight, and after it's time to digest it, what that really accomplished. So my best bet is that we are now in a massive, massive bear market that is going to take us down so low. I'm not even going to let me just go to times. weekly. Let me go to monthly. That's not even deep enough. I think we're in a massive bear market low that's going to take out at least the 2002 lows, which doesn't say too much right now. It's not saying much. That's only another 10-15% away from the downside. But also, I believe that, like I said, we're going to take out the 2004 lows. Well, guess what? That happened without a blink of an eye, less than a blink of an eye. What I also think we're going to do is we're going to wind up taking out the 1997 lows, 1996, 1997 lows. When is that going to happen? I don't know. I hope to God it doesn't happen for several years from now or anywhere near this fast. But no question about it, my thoughts are that we were going to take out the 02 lows. So what we're going to do to manage the accounts going forward, being long 120% right now in the RIDEX indices and the precious metals and energy funds. If we can get a bounce back up to that 1020 level, that'll be about a 15% return. I may or may not, based on price action, start scaling out of what we have in a long position. I may or may not. Again, it's all based on price action. I don't predict. I just respond. Scaling out of our long position very rapidly and maybe reverse to get short, depending on price action, how that pressure point is treated at 1020. With any luck, with the gods smiling and everybody doing everything they possibly can to pump this market up, we might be able to get back to the 1100 level, 1110, 1120 level, the breakdown level, and that would be a 25% bounce. That would look real good for the accounts, although we have suffered a little bit of a drawdown so far in just the last week. If I was talking to you last week, I'd have told you we were up about 8% for the year. Okay, actually about 7%. Talking to you today, we're actually down about 7% for the year. So that's kind of what just happened. But we're down 7% in a market that's down over 40-45% on the S&P. So we don't feel too bad. But if we can get a bounce back up to either one of these levels that, like I said, I got at 1020 to 1110, 1120, 1020, 1120, we're going to start scaling out of our longs, looking to reload short, and that's going to be pretty much it. Beyond that, I really can't tell you a whole lot what's going to happen other than, we're in a major crisis that's been brewing, and it's been unfolding basically for the last year, obviously. Looking at our past recommendations, the kill zone and everything like that, God, if we would have stayed short as much as we had, it would look like a friggin' genius by now. But I'm not a genius. I manage money. I do the best I can, and I try to work with the parameters that we have. What we've had, basically, and what we got this week. This is what we had for the entire year since October 2007. Basically, manageable volatility, and that's what you want. You want manageable volatility and nice, clean swings and moves. You don't like this chunky switch, congestion garbage. You want nice, clean swings with manageable volatility. That's what we've had for the most part all year and going back quite a few years. What we got this year is absolute unmanageable, unprecedented, historically deviation by the norm of 5 standard deviations, 10 standard deviations, I don't care what metrics you want to use, of any extreme historical norm that we've ever been able to manage to work off volatility. That said, that is opportunity, but opportunity for those that understand what kind of environment we actually are in on a world global financial market basis. So, with that in mind, like I said, looking for these bounces. What happens if we don't get the bounce? Again, we still have 45% dry powder and money market. We can go anywhere. We can do anything depending on what Monday, Tuesday's price action is. Monday's a holiday. It's going to be thin. So if they're going to move this thing, they better do it quick on a thin market and jam it back up. Let me go to the monthly again. What obviously could happen is we wipe out these 2002 lows at 7,600 on the S&P. I hope that we get at least a bounce, and I'm very confident. I feel very, very comfortable saying that we should wipe out those lows. I'm just hoping, in my best estimations, that we at least get that bounce to 1020 before we start heading back down to wipe out those 2002 lows at about 750. and with any luck, like I said, 1120. How I'm going to manage it from there is, again, it's a day-by-day process, and you know, I'm working with everything I got, just like everybody else is. What they're doing behind the scenes at the Treasury and the Fed is completely, you know, just beyond words. So, you know, that said, I don't want to go on too much more about my opinions. If you have any questions about how we're managing things and what we're going to do for the client accounts, or if you're not a client, you're just a member of the public, this is not a recommendation to buy or sell or do any investments whatsoever. Feel free to give us a call or a contact. All right, I wish you all the best, and we'll post next week sometime.